Hello, investors. It's Don Vandenbord, Chief Investment Officer and Senior Portfolio Manager at Revere Asset Management. Today is Friday, June 25th, and you know if it's Friday and it's me, it's the big show, the expanded edition of the Revere Market Insight video where we take a look back at the prior week, take a look ahead at key levels for next week, and update the world famous 21 over 21 leaders list, which could have been exactly the same as last week, as no stocks broke the 21, but we're going to add a couple to it this week, as there are some very strong stocks, including some that we bought in-house this week. So they're good enough for us and our clients. They're certainly good enough for the 21 over 21 list. So we'll take a look at that momentarily. We continue to be in an uptrend, as you can see over here on the trend gauge. The key four measures that we track for market health: market leaders, short-term overall state of the major indexes, medium-term, and long-term, all in a bullish uptrend. So we track market leadership. That's where you can truly outperform. These are the types of stocks we target when the major indexes are above their short-term 21-day, medium-term 50-day, and long-term 200-day moving average. We definitely want to get the market first, as 75% of stocks will track the overall trend of the market. So what happened today? Strong recovery week. Looking back to last Friday, we closed the week below the 50-day moving average, prompting us to go to a neutral stance across short and medium term factors, with an inflection point the Wednesday that the Fed met. They kind of rattled some investors with their possibility of a quickened pace of rate hikes, and that sent several sectors sharply lower and caused some rotation. But we bounced back strongly on Monday, continued it through the rest of the week, and really a good week overall for our portfolios and also for the markets, and especially important for leading stocks. So to close out the week, S&P 500 up 1/3%. NASDAQ took a little bit of a breather, fractionally down. Dow Jones up 0.7%, as industrials got a little bit of a boost from the supposed agreement on an infrastructure bill, and also a strong earnings report from Nike, up over 15%. Mid caps up 0.9%. Russell 2000 fractionally higher. Let's get to the charts and let's get started. But first, let's get a look at the guys running Revere Asset. We are a fully transparent registered investment advisor who seeks to go with the market trends. We participate in uptrends, and then we identify changes in trend if we're either going sideways or down, and lock in gains and attempt to protect our clients' capital. And if you're interested in this approach, you can give a shout to any of us: Dan, Tim, Hunter, Alex, or Don at revereasset.com, or call 855 Real Wealth. That's 855-732-5932. Let's start off by taking a look at the indexes, as we do in every video. Let me blow this up so you can see here the end of last week. Here's the Fed day. This is Wednesday the 16th. Kind of a wild day in the afternoon, inside day on Thursday, but there was a lot of rotation going on as financials were sold hard, as well as industrials, basic materials, and some energy stocks that followed through on Friday as we broke to the downside, breaking the 21 and the 50-day moving average. So would we follow through to the downside early this week? Not so fast, my friends, as we had we actually had a mixed open on Monday, but trended up during the entire day. So getting back above the 50-day, back above the 21-day moving average on the S&P. And then you can see how we continued to follow through with strength on Tuesday. Nice digestion day on Wednesday, and some trending higher days on Thursday and Friday. So this is just exactly what you'd want to see if you're a bull. So now what do we want to look for next week? We want any pullback to be contained by the 21-day moving average. So 42.25 on the downside is a key area of support. Let's move on to the NASDAQ 100. As you can see, we really didn't break below in any way, shape, or form. In fact, on Friday, we had some extreme strength in tech stocks as interest rates dropped. As you know, if you've been listening to our videos, the correlation that we've had between higher interest rates and the negative impact that's been going on in tech stocks. But contrary to what you would think would happen, with the Fed quickening the pace of rate hikes, you would think that, rates would go higher and that would hit tech stocks, but actually the exact opposite is what happened, and that's why the markets are so hard to predict sometimes. So we had tech take off on Thursday, inside day on Friday, and then nice days Monday, Tuesday, Wednesday, Thursday, and a tight digestion day today as some leaders took a little bit of a break. Let's move on to the Dow Jones Industrial Average. This of the major indexes was probably impacted the hardest because of its industrial type makeup. Fewer tech stocks in the Dow, so you can see Thursday and Friday really particularly tough days on the Dow as it broke deeply below the 50-day moving average. But by the end of this week, you can see the very strong rebound and getting back above its key 50 and 21-day moving averages by today's close. Let's move on to mid caps, which also had been lagging, but we're also able to put together 5 straight up days this week and get back above the 21 and the 50-day moving averages. And small cap stocks, again, putting in 5 straight up days to get to the top of this 72-day long base, as you can see here. Let's quickly break down small cap stocks into growth and value, and you can see this is something that we learned from the deep dive that we took, trying to minimize drawdowns and recognize when growth might be going out of favor. Here you can see February 9th when we peaked in the Russell 2000 Growth Index, and this very difficult pullback that we saw for 3 consecutive weeks. And you can see the relative strength, how it declined, going all the way from February and then finally bottoming here mid-May when growth stocks started to come into favor, then turning back up. You can see how it's above all the key moving averages now. Meanwhile, small cap value suffered, but not to the same degree. As you can see, it pulled down, went sideways, made new highs, and then corrected over the past 2 weeks before rebounding this week. So always want to keep an eye on what's going on with IWO, the small cap growth index. So let's segue from there into what's actually going on in the 12 spider sectors. We track these meticulously and keep a leaders list in all of them. Something else that we learned from our deep dive is just because growth stocks are working doesn't mean that you don't want to keep an eye on what's going on in other segments of the market. It helps from a diversification standpoint, and also helps recognize when money might be flowing out of one sector into another. So we normally don't pay as close attention to financials, industrials, basic materials, real estate, as we do to technology, healthcare, retail, medical, because typically that's where the big leaders come from, but certainly doesn't mean that money can't be made from there when those sectors are in favor. So let's start off with basic materials. This is one that really deteriorated late last week and frankly didn't improve. Well, let me get this back to a more normal font. This is one that really suffered late last week with the Fed change in tone, and you can see it really did not bounce back at all from a relative strength or a price perspective this week compared to the rest of the market. So we're certainly minimizing our exposure to this sector. Energy The second sector we want to take a look at, and energy rebounded nicely. Two-day sell-off Thursday, Friday, 5 blue days, meaning we're positive all 5 days, back above the 21-day exponential moving average after bouncing off of the 50-day moving average. Financials, again, looks a lot very similar. Moved down harshly on Thursday and Friday, recovery right into the 50 and the 21-day moving averages. Communication services, this has maintained strength, really keeping pace with the S&P 500, holding the 50-day and trending higher. Industrials, I think you know what you're going to see here. Harsh trend down, decent recovery on price, but not really outperforming at all, coming right into the downside of the 50 and 21-day moving averages now. So we want to take a look and see what happens next week with that. Technology, the leading sector, both in market cap size, weighting, and certainly for producing leading stocks. You can see never broke the 50 and the 21 last week and making all-time highs this week. XLP, staples, not where you want to be when growth stocks are working. These certainly outperform during a struggling market, but when growth stocks are working, they grossly underperform. And there are none of these right now on the 21 over 21 list. You can see the very strongly declining relative strength over the last 3 weeks, and now below the 50 and the 21-day moving average. Real estate had been acting very well, taking a little bit of a break this week, relative strength-wise, underperforming, but going sideways and consolidating above the 21-day moving average. Utilities is another area you don't want to be in when growth is working very well. You can see this tough decline over the last week, bouncing off the 200-day moving average. Healthcare, a lot of nice leaders coming out of this area recently. You can see after a sell-off a couple of weeks ago, a recovery really not even affected by the Fed decision and powering toward all-time highs this week. And finally, consumer discretionary, consumer spending alive and well. You can see the relative strength over the last 2 weeks here approaching the top of the space. This is heavily dominated by Amazon, which had a pretty good week and is also approaching the top of its base. So people are spending money. A lot of retail stocks in here, as you might imagine. Okay, so those are the 11 sectors. Now we want to get to the actual 21 over 21 list. And as you can see, I've actually got a couple of bonus stocks in here. Just some, I considered cutting a couple of software stocks, but I was really having a hard time because there was really such a variety of stocks working well across multiple sectors. So decided to keep a couple more in this week because I really want to include some new stocks that we added to the portfolio this week, starting with these top 3, DD, Fang, and Zim. So let's drill down into the overall list. This list contains no basic materials, no financials, no staples, and no utilities, as I mentioned, as those really aren't in favor right now. So we're going to focus on the 7 sectors that are. So let's start with Triple D. This is something that we added to the portfolio this week after this big volume move off of this nice consolidation back into the 21-day exponential moving average, and very rare after a nice 28% move up on Tuesday, 3 consecutive days of strong action, not really giving back any of the gains. This is certainly a stock you want to keep an eye on. And we did take a little bit of a profit in it, started a 3% position. When you get a 20% gain in a couple of hours, you should probably take some off the table, and that's what we did, but still holding 2/3 of our initial position. Fang is an energy stock that we added this week, and you can see anything that's near all-time highs and has the relative strength that it does is certainly deserves a place in a portfolio, and also offers some nice diversification also. Zim, a transportation shipping logistics stock. which we added off the 21 on Wednesday. Strong movement with volume on Thursday and Friday toward all-time highs. And now we're back into the stocks that remain in the portfolio from the prior weeks. Lulu, retail stock, really getting some relative strength and looking very good. People are getting back out into the world after COVID, and they're spending money on Lulu products to do it. Roku, also something we added to the portfolio late Friday. I realize it's extended, but you don't see 6 days of a volume mover with this type of velocity very often. We want to be in something that's moving like this, especially with the growth numbers that it has. And so we took a couple of tiptoes into it over the course of the day on Friday. And of course, keeping the stop tight. This should hold this 398-ish area on any pullback. PayPal, trending nicely higher above the ADMA. In fact, the ADMA is holding a lot of these moves higher that you're seeing in a lot of leading stocks. They're not coming back anywhere near the 21-day as the 8-day with a strong power trend is containing any pullbacks. Avantor, a medical stock, broke out nicely above this recent base. InMode, another medical stock, you can see 5 straight up days this week on it, and relative strength at a new high. Revolve, very strong move after this lower volume pullback into the 21 and a 20% move over the last week and a half. ESTC, this is a software stock that's making some very nice gains. 6 software stocks in this list, but they're all from 5 different software subsectors, so we'll call them industry groups. Computer software, this one being from database, and the next one, Vive, is medical type software. So big gap up on earnings, pull back to the ADMA, continuing to trend higher. Signet Jewelers, tough pullback after just getting a little bit too extended. Looked like it was going to run to the moon, but some selling off toward the end of the day today, but still above its ADMA. SC, C Limited, internet content, consolidating nicely toward and making new all-time highs this week. Net, something that we've owned for a while, really taking advantage of this strong move up, and it's broken out of this nice stage 1 base. Looks fantastic. Snapchat, we sold it below the 21 day about a week ago, but was having trouble getting over the 65 area. Finally did at the end of the week, and it's certainly something we're keeping our eye on to re-enter. CrowdStrike, our initial buy on this was off the 21 day back here, and this has really shown leadership qualities. Look at the blue bars of accumulation, relative strength, consolidating very nicely near this the top of this base now. DocuSign, another one we've been in for a while, initially kicked off by this very positive high volume reaction to earnings, and absolutely no give back since then as it comes to the top of its base. ANET, a little bit of a decline in relative strength this week as it comes into the 21. Nvidia, another one we've been in for a while, just continues to trend higher. Look at the big blue bars. A little bit of a sell-off on a couple days this week as it pulled back. Probably when crypto was pulling back is tied to this pullback, as it does produce chips for crypto mining rigs, but it bounced nicely off the ADMA 3 days up after that, and nice little consolidation day today. TMUS, excuse me. Lack of relative strength over the last couple of weeks, but really this could turn into a 3 weeks tight right above the 21. AMT, American Tower, this is it's a REIT, but not what you would think of in a traditional REIT. This is they're in the cell tower business, and I certainly don't think that business is going to be declining anytime soon. You can see the pullback into the 21 there. DPZ, Domino's Pizza, delivering nice returns on a continuing basis for investors. Fortinet, this is the last of the stocks in the list, and this thing just continues to chug higher above the ADMA. It's also the second security software stock that we have in here, in addition to CrowdStrike. So that's going to wrap it on the 21 over 21 list. Let's take a look now at the Dirty 30. So the Dirty 30 was a list of, it's up to 75 stocks now, of stocks that were leading around mid-February when growth topped and corrected at least 30% off of their highs. Let's see the ones that are now within 10% of their all-time highs, sorted by this column here. And if it's flagged, they've really come all the way back and are now showing leadership, and we own quite a few of them. DT, very nice break out of this double bottom base. Look at and you'll note the relative strength on all these that really started to kick in mid-May when growth stocks bottomed and started to come back into favor. CrowdStrike, we own this. Already looked at that at the top of a nice base. DocuSign, another one that we own. Viva Systems in the 2121 list. Net, we own this. SE, also in the 21 list. Shopify, took a close look at possibly adding this today. Ultimately decided on adding Roku, but this is certainly viable here off the ADMA with a stop below today's low. Zscaler, cousin to CrowdStrike, gap up on earnings, a little bit of a correction back into the 21. Very nice strength over the last couple of weeks. Snapchat, already mentioned this one. NTRA is the last one I'm going to show. Reversal today, but near the top of its 110-day long base. Let's take a look at some of the ones that you want to avoid. Bunch of these still 60, 70, 80% off of all-time highs, like Plug, Jumia, AI, DM, NNOX, Array, and QuantumScape. So some of these will never come back to be leaders again, but we certainly want to keep an eye on the ones that do. So that's your Dirty 30 update. Let's talk about some changes that we made to portfolios this week. I talked about Nvidia, how we took some profits last week, added it back on this pullback. That ended up being a pretty nice trade. Fang, we added this to the portfolio on the strength in energy early this week. QCLN is a clean energy ETF. TAN actually acting a little bit better, but we saw some good relative strength and money flows into this sector, and we wanted a broad exposure to it, so that's working pretty well. We got stopped out of Upstart when it broke below the 50, made a nice rally attempt on Thursday, but rejected by this declining 21-day, and finished right on the 50-day for the week. Talked about the add of DDD, the add of Zim. We also added NRGU, which is a kind of a unique, it owns 10 stocks and has a 10% exposure to each of them, so some nice diversification there. A little bit better than XLE, which is really focused on Exxon and Chevron. So we'd like the makeup of this ETF, and we certainly like the way it performed this week. And Lilly, we added but then sold it. They announced breakthrough status for the Alzheimer's drug. My expectation would be that the stock would take off after this, bought it pre-market and during the market shortly after the news came out, but it certainly, a closer look and some interviews with the company didn't show the promise or the price action that I was looking for, so we cut this on Friday and trimmed some CrowdStrike, and on the infrastructure news, we added some exposure to Cleveland Cliffs right off the 21, and to the other leader in this group, Nucorp. These really didn't show the strength that we had hoped, and basic materials are a little bit under fire, so these might get cut shortly if they don't get back above and their action of the most recent couple of days. So that's going to wrap it. Also talked about Roku and how we added that on Friday, and that'll finish up the week. So as always, love to hear your feedback on Twitter at @Vandenbord, email don@revereasset.com, phone 855-REAL-WELL. So wrapping up the video for Friday, June 25th, this is Don Vandenbord telling it like it is. Have a great weekend, and thanks for listening.